Hello my fellow freedom builders and welcome back to the channel. I have gotten a lot of requests about my automated ETF strategies and if I wanted to give a little update on them, and of course I will. I actually had planned to do it about the year's end, but you can easily get it now and see how we are doing. They are doing great, I can tell you, and then I can do a little extra update when we are getting closer to New Year's Eve. So what we're going to have a look at today is my automated ETF strategies. So what you see today is pretty much the results of you could call it an algorithm, a calculation where we take a look at the ETFs and we can test them back in time because the rules are very clear, completely 100% rules based, so it is easy to test back in time. What I am doing is pretty much the same that I'm doing normally with stocks. That means that I'm looking at ETFs that has been going up more than the entire market and with less volatility, meaning that I do want ETFs that instead of just going for the big performance like this, where we see a lot of volatility inside, I might tend to go for an ETF that goes with a bit less performance but with smaller fluctuations inside it. So I'm looking for steady growth, you could say. And I have a platform here where it is programmed into. You can see here we have a test here. I have been trading variations of this. This is a test back to 2012. And these are complete the same rules that I am using today. You can see the performance here. I'll have a look at the numbers in a second. Down here you can see the drawdown, meaning that the largest drawdowns this strategy has had at any time is 15%. I know this spike only says about 12, but it is 15%. So as you can see, we have in 12, 13, 14 upwards here, only had around 8 to 9% in max drawdown, and then we had this spring with the virus and everything that completely destroyed many markets. When we're looking at the overall market here, let me just drag this one in. You can see that over the last 8-9 years, this one has had an annualized return of just above 17%. Now this is without the trading costs, so we are around at about 1% lower, so 16.5% it should actually be here annualized. A Sharpe ratio is just below 1.5, which is great. If you don't know the Sharpe ratio, it is where you take your performance and divide it by your volatility. So it tells us if we are getting a good performance compared to the risk we are taking within the investment period. You can see here the max drawdown is 15, and we have something called the Sortino ratio. I have mentioned that in a couple of videos. I'll not go into details with that, but that is also a ratio telling us how much risk we are taking to the downside compared to our annualized return here. As you can see right now, the year to date is actually 42%. And this is without any sort of leverage, or we're not going short. That's not completely true. We have a single oil short position in there somewhere, but otherwise we're not taking short positions. This is a pure long play. Otherwise than that, you can see the last 12 months is 45%, the last 3 years is 77%, and last 5 years is also very decent compared to that of the S&P 500, which actually has had a good run in these years with around 14.3%. That is more than the historic average, around I think it is 7 or 8%. And we have a Sharpe ratio at 0.9 simply because this is so large. Normally the Sharpe ratio of the S&P 500 is actually way lower. We have higher volatility and we have a max drawdown at around 33%, and that was of course in the spring here as well. All right, when we take a look at the performance stats here, the annual returns here, we have around 42%. Compared to the benchmark around 17. You can see it's not every year that this strategy is beating the market. For instance, in 2019 it was quote unquote only making around 28%, where the market made 31.5. That is actually okay. In 2018, that was a tough year. We can see that the strategy was in a minus. It was actually at a loss here. I think it is the only losing years for the last 8 or 9 years. I should say that we have tested this on similar strategies back to 2007, 8, 9, where it also performs quite nicely. But we can see in this time span we have tested it here. The worst year is actually 2018, and if you remember 2018, it started the year quite badly with a loss of, I think it was 10 or 12%. Then it went up and a bit sideways, and then in Q4 we had the big loss at 20% over a quarter. So that was what kind of destroyed the performance here. You can see the benchmark, the S&P 500 were also down. And this is the comparison column where you can see how are we doing compared to the S&P 500. So it's not every year this strategy is beating the market, but that is not what I'm looking at. What I am looking at is how are we doing compared to the risk we are taking, because here we are taking a lot less risk than we are in the S&P 500. We can also see the same here when we're looking at the monthly returns. These are as you can see, month by month. And what I'm looking for here under the strategy column is how every time we have a losing month, how many losing months in a row are we having, and how many months is it taking for us to regain the loss. So as you can see here, 2012 was a great year. We had one losing month, and it took a couple of months to regain that. That was okay. You can see here it's a couple of months, taking a bit more than a month to regain that. Have a losing month here as well. When we're going down, we have 2014. Not many losing months though. That doesn't mean that there might not have been a drawdown intra-month here. Let's say, for instance, here we have the 2014 in July. That is at a positive, at a profit at 0.6%. But maybe in the first 2 weeks it had a drawdown of, let's say, 5%, and then it regained that and ending up at a 0.6% here. So that is why all the green numbers, there could easily have been red numbers if we had looked at it 1 or 2 weeks into the month, but this is how the month ended. So as you can see here, we had the 2015, as I said, that was a tough year. We had a couple of losing months, then a positive month regaining, a losing month, a positive month regaining, 2 negative months here, and a positive regaining it all. So 15 was a very much up and down year, and it was kind of year that is tough for a trend follower, because the year pretty much went like this. So every time a trend follower, the trend was strong enough to get a buy signal here, the market turned around and we got all the sell signals. And every time it turned around again, we got the buy signals and then the sell signals. So I think many of you that are trend followers, you can agree with me that 2015 was a tough year to invest. But this actually did quite well. When we're looking at the yearly, it ended up at 10.1% compared to the overall benchmark at 1.3. So if we are going down to just to have a quick look, and this is how I get a quick idea of if my strategy is solid and something I want to trade. You can see only single losing month, and we have 16, couple of months here that took about a month and a half to regain. We have 17, that was a fantastic year. 18 started out with 3 losing months years. Started out with a plus, but then 3 losing months. Then we had some winners and some losers at the end. And as you remember, 2018 ended up with a small loss on my account at a couple of percent. Then we have 19, almost all winners here, a single losing month here. And here in 2020, it has been absolutely amazing. As you can see here, in February and March, we had some small losses. And I should say that at this point, if you remember the video, the first video I made in the beginning of the year or somewhere in the spring about this, I actually showed a profit here. And that was because I was trading with a bit of a different, it was a variation of this strategy. So these two numbers, at least this March number was actually in the positive, and the April number was a bit smaller than this. So the 42% for this year is actually more like 39%. It is not completely true when I'm saying it's 42, because I made an adjustment in my in the combination of strategies I'm using here. I'm using 3 to 4 different strategies in combination, strategies that are not correlating widely, meaning that if one of them is getting a drawdown, if I draw it here, if we are having one strategy running here with a drawdown somewhere in the middle of the year, then we have another strategy running here where the drawdown is coming later in the year maybe, and a third strategy where the drawdown is coming in the beginning. So all of these drawdowns kind of equals each other out. That is at least the intention with it. So these are a bit skewed, these numbers here, but this is from my real ETF strategies here. September and October, small losses, but then regaining it all, and up until now December is up with around a percentage point here. So this is just to give you a quick example. I've also gotten a lot of questions about trading this strategy as copy trading. And I am trying to figure out how to do that. And the reason I'm saying that is that it takes quite a lot of different ETFs. We're using actually 50 or 60 different ETFs. And the places where we can normally copy trade, they don't have that amount of ETFs available. But I think we have found a solution, and I'll let you know as soon as that is possible. Also, as some of you, at least those of you from Denmark know, then we are very far in the process of setting up our fund, a real professional investment fund. And in that fund, we will use a variation of this strategy where we get almost the same annualized return. It actually is a bit lower here, but the max drawdown is also way lower. The strategy we are working with right now and testing very much is only having a max drawdown of around 8.5 to 9%, and the Sharpe ratio is actually quite a lot higher. So that means that we can get up to a Sharpe ratio around 1.7, and that is a strategy combination that we are trading live right now on our own accounts to make sure that all the stuff we can see in the tests are also the exact same numbers that are showing up in real-time trading. So there's a little caveat here with the professional investment fund, and that is that the lowest allowed number amount of money to put in is 100,000 euro, and that is simply from a legislation point of view, where when you have such a fund in EU, you can only put in at least 100,000 euro. So I hope that we can get to a solution where we both have the professional fund and then running the copy trading solution for those of you that are not running around with 100,000 euro in spare change. Not many people do that, and that should be respected as well. All right, so I hope this gave you kind of an idea as to how the systems has performed. Those of you that are saying that you don't want to invest in ETFs, then what I'm doing with stocks, where I'm looking for trending stocks that are doing better than the overall market with quite low volatility, that is the exact same thing. That can, however, be a bit more volatile, and that is because if we are investing in 10 or 15 or 20 different stocks, then if 1 or 2 or 3 of these stocks are having a bad month, for instance, with that could be it was a pharma company coming out with some bad news about a drug they're developing, then if one company is taking a nosedive of, let's say, 20 or 30% out of the blue without us being able to detect it in the overall trend first, then we can have a bit more volatility. Also on the upside, of course, it might be that there are coming some great earnings numbers, and all of a sudden 1 or 2 or 3 of the stocks are shooting up with 50%, and that of course is giving us a lot of upside volatility. But that means that when we are using this strategy with normal stocks, our volatility goes up. The reason for us to use the ETFs when we do this is simply that we're using a large number of ETFs, and in each ETF we have a large number of stocks, and that is taking a lot of the volatility out of the strategy, and that is what we want, at least for the professional fund, because people are putting in some quite large amounts and they are not interested in all of a sudden have a drawdown of 30 or 40 or 50% for that sake. So that is how I work, and a bit with stocks, a bit with ETFs and combinations. And as you know, next week I also come up with my short-term swing trading strategy performance numbers. They're coming here in the middle of the month. And I can say last month, after the first 2 months, we were up around 40% for 2 months. And I can say that if we keep just about the performance we have now, you are going to see some truly astounding numbers if you follow the channel, and make sure to watch the video about my short-term swing trading next week. That's about it for now. I hope this was kind of informational and motivational for you. Always, you are of course welcome to ask me questions, anything about ETF, stock trading, my strategies and so on. I try to answer the best I can when I see the questions in YouTube, on Facebook and so on. Remember to subscribe and hit the like button down there, bell notification and all that you can find down there below the video. And take care of yourself and your money out there. I'll talk to you again very shortly. Bye for now.